We're talking the Fed and politics with our next guest on Kitco's Gold Report. New York hedge fund manager and large political donor Sean Filer is also a strong advocate of a gold standard. We'll get his thoughts on how the U.S. elections are shaping up thus far and how it can impact gold. Sean, welcome to the program. Good to have you in studio.
Thank you. Thank you for having me.
So let's start by talking about the U.S. elections. I know it's a topic you're passionate about. My question is, how could it impact the markets, especially gold?
Well, it's fascinating. I think the electorate wants a change.
Yep.
That's pretty clear. And the markets are still anticipating almost no change. And so you have stocks trading on lofty multiples and bonds trading on a negative real yield. So somebody's wrong.
Do you think one candidate would favor gold more over another?
Well, I think Trump certainly brings more change, right? Clinton is the status quo. It's more elite expert control of everything, not just money. And Trump, part of the attraction, I think, is that he brings that unpredictability and that actual change.
This election, we also saw talk of a return to a gold standard. Trump alluded to it. Cruz also brought it up. Of course, Rand Paul did as well. You're an advocate for a return to a gold standard, but a lot of experts I speak to, their number one argument against it is, well, there's simply not enough gold to support a return to a gold standard. What are your thoughts on it?
So that's that particular argument, I think, is a red herring. There's an ounce for every person alive today, as there was 100 and some odd years ago when we were on the gold standard. And so that's not the issue. I think, admit, and it's completely true, that returning to the gold standard from a standing start is not going to happen, right? The financial architecture isn't going to be compatible with sound money. And so what we're advocating for at APP is opening up the monetary system to competition. So we have gold and silver, we have fintech, we have payment technology. Marrying the two creates a real competition for the Fed and ends their money monopoly, which has been abused, certainly in recent years.
Okay, so is that realistic? Do you see this happening?
It's very realistic. I mean, it is happening. And whether or not the Fed and the OCC get ahead of it or don't get ahead of it, it's going to happen one way or the other. The technology is there. Gold coupled with electronic payment technology is better than what the Fed's offering. The Fed's in a very weak political position, and it's offering, I think, a clearly inferior product.
So what would that do to the price of gold?
Well, you're getting the remonetization of gold because of first world central bank policy. The regulatory approval or easement of the use of gold with modern payment technology, I think accelerates that, but I think you're going to get it either way.
Let's talk the Fed. How do you see the monetary policy unfolding here? Do you think we'll see a rate hike this summer? And if so, how are you positioning yourself at Equinox Partners?
Yeah, look, I mean, I think the market is anticipating some hike. I don't know if that's more likely or not than everybody else, but the Fed's constrained and conflicted, right? So the Fed doesn't want a stronger dollar. They've been explicit about that. The world we lived in 4 or 5 years ago, where the yen could go from 80 to 120 or 125, and you had the FX markets as a global shock absorber, that's gone. Central banks understand the FX markets are a zero-sum game, and so the politics of monetary policy are constraining the Fed and other central banks, and I think in a way is going to be very uncomfortable for them.
We saw the ECB today, announced no change to their interest rate. Do you think that the Fed will take a cue for this, or are they just really looking at the data that's happening here in the U.S.?
So whether or not they increase, 25 bips in the next meeting, or whether they're able to do 25 bips beyond that, I don't know. I don't know if anybody knows other than them. I think the bigger point is that they're constrained, and whether they can get back to normal monetary policy seems extraordinarily unlikely, and even raising a little may cause meaningful blowback. I think we're already seeing that with the Chinese and kind of their signaling of their discomfort with the RMB appreciating along with the dollar. So there are real constraints to what they can do.
All right, let's switch gears and talk mining stocks. Equinox Partners is invested in gold and silver mining companies. They've had a good run this year. Do you think that this bull run will continue? How do you see it playing out?
Still early days. It was 5-year bear market ending at the end of last year with the indices down about 90% cumulatively. We're up 80-90% for the indices on the year to date. I think it's still got farther to go. The stocks are now discounting prices of the metals about where spot is, but I think the metals have further to go as well.
All right. Sean, thanks so much for coming by the studio. Yeah.